Good afternoon, ladies and gentlemen. Welcome to Business Today and to our special show, Market Gurus, where you get to meet the finest brains on Dalal Street. And today's guest is none other than Mr. Vaibhav Sanghavi. He's the Chief Executive Officer of ASK Hedge Solutions. This is a group within, I think, India's largest PMS manager, ASK Investments, which runs a long-short fund, and they are at the right spot, hedging into futures and options. Vaibhav ji, namaskar, swagat hai aapka. I'm sure your expertise is put on full use in this kind of a market where you need very, very heavy protection given the sustained and the continuous rise that we are seeing in Indian markets. Vaibhav ji manages ASK Absolute Return Fund only in the F&O space, and of course prior to ASK Hedge Solutions, Mr. Sanghavi has worked with Ambit Private Limited, DSP Merrill Lynch, and over the past 24 years he has a very fine track record in the markets. Vaibhav ji, namaskar, swagat hai aapka. What a time to be in the market, and what a fantastic rally we have unfolding on Dalal Street as of now, 6 days ahead of the budget. Is this a giddy feeling that you are having in the markets, or is this something really, really exciting you wake up to every morning?
No, of course, that's an excitement I always look forward to. But, when we talk about the upcoming event, and especially as you rightly alluded to in terms of the budget, typically what a risk-adjusted return fund or a long-short fund does is basically going into these kind of events. We generally don't take any big directional call purely because let the event kind of pan out, let the outcome is there, and then we'll kind of analyze and probably look at the market in terms of the objectivity. So that is usually our kind of approach on that.
Okay. Vaibhav ji, let me just get this one point clear up in the beginning. Hedges are useful when you have a volatile kind of a market which is not unidirectional but moves in opposite phases in a very short period of time. As of now, the market is unidirectional on the long side, and a lot of people have been telling me that hedges are resulting in costs that they much rather not have when the market is in a predictable zone. So which side of this equation do you stand on? Do you do very excessive trading? What is the turnover ratio for ASK Absolute Return Fund, or are you just quietly sitting into long F&O positions and enjoying this rally?
Yeah, I think it's a fantastic question, and what happens or what is the nature of hedge generally is that people always feel that pinch in terms of the cost associated with kind of hedges. Now, as a concept, when we talk about hedges, it is never a point in hedge. It is always a continuous hedge, meaning that it's not that for an event you go and hedge it and you probably are mitigating that event. But a lot often hedges are useful when you actually cannot foresee the event,
Yes.
right? And that is the meaning of hedges. Now, say for example, when kind of COVID happened. Now, people couldn't foresee it. And 1 month when the markets were down 25-26%, people were grappling, after that fall, what to do about the portfolios, right? And subsequently, if you saw in the next 6 months, we actually saw outflows in terms of the mutual funds as well. So people don't see those events coming. And that is where the utility of hedges is always there. So as a long short fund, we always believe in constant hedges at every given point in time, and that's why the whole merit of risk-adjusted returns and consistency of returns.
I have this very interesting theory, Vaibhav ji, about hedges. People always crib about hedges and their cost till the time it becomes effective.
Absolutely, because that's the turning point or the tipping point, I would say.
Absolutely. Okay, just a couple of questions on the fund. What is the long short ratio as of now? And within F&O, we have about, if I remember correctly, 190 stock futures. How many do you actually deal in? Do you deal in the upper 20, which are extremely liquid, and do you do options on the hedge as well?
Sure. So, if you, I can segregate the question to two parts. First, in terms of the long short ratios, currently we are closely about around about 65% hedged in terms of our portfolios. At the same time, when we talk about the universe of our stocks in terms of where we do go long and short on, typically my larger exposure into the top 100 names. Of course, that doesn't mean that we cannot go to say 185 names where the kind of F&O universe is available, but large part of their exposure is into the top 100 names in terms of the weightages of the portfolio. Of course, we have a portfolio which is well diversified, larger number of stocks in the portfolio, both on the long and the short side. Will ideally have exposures throughout, but from a concentration perspective, higher volumes would be in the top 100 names.
Okay. And is this a leveraged portfolio, or is it just the AUM that you have which is deployed in long short?
So, as a concept, right, when we talk about absolute returns, largely the characteristics of that strategy would be that it has to have a very low drawdown, at the same time, very low volatility. In our kind of characteristic of product, typically you will find the standard deviation or the volatility of the portfolio close to about 3-4%, and drawdowns not kind of exceeding 0.5% to 1%, in any eventuality, right? Now, to maintain those, kind of, ratios, typically, the more you leverage, higher would be your volatility. So ideally, especially in our case of portfolios, we generally don't leverage. Having said that, AIF category 3 as a vehicle, regulatory permission is there up to two times of leverage,
Yes.
but we generally don't take leverage.
Fair point. And I think as a fiduciary responsibility, one of the best things that you do is to not take leverage at a time when things are really, really overstretched. Vaibhavji, at this point of time, do you think it's becoming a little difficult to find consistent long trades given the breadth, and the scope, and the intensity of rally that we've already seen and it is behind us?
No, of course. See, I think the markets have fantastic momentum. Okay, in terms of the expectation of a brighter future, in terms of an expectation that the budget is going to be fantastic, and also in the expectation that India is one of those markets across the globe which is actually giving you that kind of decent growth. Now, all this kind of culminates in terms of the value you pay for the assets you want to own. Now, if you see the broader market, from a large cap, mid cap, and a small cap universe, the way we see is basically the mid cap and the small cap universe, to be very honest, is looking like a little stretch in terms of the valuation. Not saying that key over a longer period of time you'll not make money. It is just as a concept that if you pay excessive valuations for anything, the gestation period would be higher to achieve your financial returns, what you are expecting for as a concept. So we do see that there is still some amount of pockets of bargains or probably investment opportunities, especially in the large caps, and that is where we are concentrating to find whatever we can.
Fair point. But Vaibhavji, given the product that you offer and its very nature, you have to be on super strong momentum either side, long or short. Do you also sort of eat time value of option decay?
See, again, a concept, which is very new for India in that sense from long short term perspective. A fund which is long or short, it actually takes a direct whether to in this fund. In our case, sorry, I think we just lost the link.
No, I can hear you clearly. We missed the answer. I'm just very gently
Sure.
requesting you if you can repeat your answer, sir.
So, when and I was just explaining the concept about long short fund compared to a long or a short fund, meaning that a long short fund generally takes both kind of positions simultaneously.
Yes.
The reason is it kind of tries to avoid the market risk aspect of investing. Now, if you are want to take a market risk and if you are doing a directional long or a directional short position, then you are no good as compared to any other long only fund purely because you are taking a direction in a particular side and then trying to see that the market goes in that particular direction and you make money, which carries its own kind of risk in terms of the terminology. So, as per our case, we take long and short positions simultaneously, at every given point in time to avoid the market risks.
Okay, I'm sure you must be having the most exciting life on Dalal Street, given this wonderful rally that we are seeing unfolding in front of us across the board. मतलब आजकल तो शुगर और कागज के शेयर भी चलने शुरू हो गए हैं. दिस इज द लेवल ऑफ मोमेंटम, वैभव जी, विच इज देयर इन द मार्केट. नाउ लेट्स जस्ट गेट इनटू ब्रास ट्रैक्स एंड ट्राई एंड अंडरस्टैंड what your outlook on the markets is. Of course, we have this budget in front of us and therefore the rally. Let's look beyond the budget and try and look at consistent outperforming themes in the universe that is there for you, 190 shares in FNO. Where do you think, Vaibhav ji, can long rolls be rolled over for a decent 6 to 8 month period?
So while rightly mentioned that budget is going to be a important kind of event and lot of direction will come post that. But having said that, if I just take out budget from the equation at this point in time, and if I look at from a pure fundamental perspective, pure earnings perspective, because I think earnings is the sole driver of how the stock prices in general. I do think or I do see that as compared to the momentum of earnings which has been in the last 1 odd year, I think that momentum of earnings is likely to kind of taper off, especially from the margins side. So lot many companies will try and focus on the top line, but at the cost of the margins, which is where I do think that the broader earnings expectations, which are close to about say 15% and higher, I think street would slightly be disappointed. Having said that, in terms of the sectors where we think that there can be chance of a positive surprise is all the consumer driven sectors, including your staples and discretionary, probably IT as well. And a shorter term disappointment probably into the kind of infra names, purely because the raw material costs have kind of inched up as well, and the execution is yet to come into play from those kind of order books.
Okay, so staples is something which you feel might give a long-term opportunity on the long side rolls. You are the best guy to ask where the market looks overstretched in FNO and where do you have shorts?
So when I talk about overstretch, I think one of those sectors where there is consensus bullishness, especially something called banking, where the valuations actually, to be very honest, appear a little reasonable. But this is a sector where we are seeing the best of the interest margins, the best of credit growth, and the best of kind of NPA cycle, which is already baked in. So from here onwards, there is a possibility that you might see any of these three things probably kind of incrementally at the margin giving worse, no, not a worse, but lesser than expected number as compared to the analyst expectation. So we do think that banking and the financial space, and especially the space where if we see some amount of ECL provisioning coming about, then we can see some amount of pressure coming back onto these broadly consensus bullish sector. So that is where we are probably not as bullish as what the street is. And in addition to that, few of the kind of auto segments where I think the effect of raw material price increase are yet to come about, and the inventory is getting higher in terms of the system as well. So those are the spaces which we are not very keen from FNO space.
I agree. So basically, you are short on the consensus long trade in the market. Is my reading correct?
In a way, yes.
Okay, fine, no issues. Okay, let's dig a little deeper. Because of the very nature of your product, at best your horizon can be 6 months, simply because ahead of 6 months there is barely any liquidity in the Nifty or the Bank Nifty. As also, the less said about stock futures, the better. But now please wear a fundamental hat, which you have done over the last 20 years. What do you think are the one or two drivers that are keeping this bull market alive, kicking, and making it bigger and bigger?
Yeah, I think the biggest driver, I think, has been the participation of retail investors into the markets. Right now, looking at a place where we have a SIP book of more than 21,000 crores, and also money coming from insurance, pension, and various other kind of vehicles coming into the market. I think that has given tremendous amount of support to the markets, to an extent that as I did mention earlier, that in mid cap space and a small cap space, I think the valuations at some, in some pockets have become a little stretch as well. Right now, that has been the driver. I don't think that is kind of going away anytime soon going forward. At the same time, one potential positive driver can be that in the next 12 to 24 months, we can see FPI participation into India coming, in a very strong way. And the reason why I am saying is basically because we are currently at a decadal low in terms of the FPI ownership as a percentage of markets currently. And in the last 4 years, we have not, on a net basis, we've virtually seen extremely marginal flow from an FPI. Now, while the rally has happened and our weight, India's weight in the emerging market basket have risen from 8% to 18% now, when the interest rate starts falling from a global perspective, is when we do think that you will see some good size inflow coming from the FPIs, which is again where I do say that it will first come into the large cap space, and that is where one needs to kind of look for opportunities going forward. So these are the two important factors, which is keeping the markets pretty buoyant, in addition to the earnings, which have been pretty steady for last 1.5 years.
In fact, that's a very well explained thesis why large caps look sensibly good, because deep pocketed players, their holdings are at a decadal low, and of course valuations compared with smalls and mids are far better in frontline blue chips. That's a wonderful explanation, Vaibhavji. Now let's look at how dramatically life has changed for the PSU pack. Should you be fortunate enough to get all 6 railway PSUs in the 2-digit mark, which was there just 2.5, 3 years ago. And of course defense has been a story that's probably one of its unique flavors in the last maybe 20-25 years. How do you explain to yourself this returns?
So I think the way to look at the PSU markets, and the way we are looking at, is basically we are clearly segregating the whole PSU baskets into two pieces. One is those PSU which are led by which are backed by reforms, and there has been reforms, and kind of there is a change in terms of the context of the whole trajectory of the business. At the same time, the other basket is that those stocks which have rallied but are very cyclical in nature. Right. So what we are focusing on is those companies, those sectors which are backed by that reforms, and which is where you alluded to, something like a defense, railways, all anything governing, PLIs, or making India as a concept. I think those are the sectors which will continue to perform, and of course they have done very well. The valuations are rich, but the valuations may remain elevated, especially on these baskets. But it should not be very, we should be careful that we should not be kind of extrapolating those kind of multiples into sectors and the stocks which are more cyclical in nature. And by the sheer fact that every PSU has gone up, those guys have also gone up, is something we should probably avoid.
Absolutely, it's wonderfully explained. These days, Vaibhavji, what people are doing is they are looking at returns in the last 6 months, porting them on an Excel sheet, and then sort of dragging the Excel sheet column on returns for 2-3 years, and saying कि 6 महीने में इतना बना है, आगे आने वाले 24 महीने में इतने पैसे बन जाएंगे. So you know those are worrying trends which I am sure a lot of your non-market colleagues, your college friends and relatives and the wider circle must be keeping you awake on weekends and on nights कि भाई बताओ अब क्या करना है. What do you think is the behavioral part of the market telling you? Because you do FNO, I am sure behavioral psychology is a very very strong input in your portfolio of hedges.
It is indeed actually, and one of the most critical components of for us to understand how the wider market is kind of positioned as well, because that helps us to see where they are getting disappointed or excited, and
Yeah.
probably we can generally kind of utilize that kind of data point to kind of position lot many a times in terms of our portfolio strategy as well. One of the again critical components is basically how they're positioning is in terms of the FNO. Now, I get flooded with inquiries in terms of over the weekend, as you rightly mentioned, that options and option writing is so easy. I mean, people can just make money, but not understanding the underlying risks which are there, within the segment. So, lot many times it is more of an educative process which you need to do
Yes.
weekends to these guys. But yeah, that's part and parcel of our story.
And I'm sure you must be telling people that the entire theoretical knowledge of option goes out of the window the moment either you buy one or sell one.
Of course, I mean, when you talk about, all the various nuances of risks
Yes.
associated with options, it's a good education for them. Let me put this way.
Okay. Vaibhavji, one of the biggest controversies that is raging in the Indian stock markets is this, tug of war between SEBI and retail investors on one side and institutional brokers as well as other market participants on one side. This this addiction that we see which is growing by leaps and bounds on the derivative part of the market. Since your whole soul existence is in this world, how do you see this talked about ban impacting business which ASK has on the AIF side, and as also I'm sure there are 20 other players who are in the same spot as you.
Yeah, I think I would probably more go from a larger context of view here, in the sense that when you talk about an ecosystem, every player in the ecosystem is equally important and vital for the overall functioning of the system. Now, at one end of the ecosystem, we are saying that the valuations are pretty stretched, and people have to be a little cautious about it, and people keep on investing in those kind of stretched valuations. That also is in some way and fashion probably a little riskier for a common investor. At the same time, if you have an ecosystem which kind of keeps on check in terms of the valuations of the company, having an ability to keep on or a mechanism of shorting effectively, have to see to that things don't go beyond I would say normalcy in that sense, then it is healthier for an overall market functioning standpoint. And in that context, every component, including your cash equity segment, including your derivative segment, and an options segment, is equally important. Of course, we do see that in each of those components, lot many a times excesses can happen, and due to good tight regulations which we have seen till now, I think SEBI has done a commendable job to kind of have all those risk measurements pretty much properly in place, to see to that there is no systemic risk arising out of any of these components.
Absolutely. I think the overall management of systemic risk in the Indian context has been one of the cornerstones of this rally that has been in place for the last 4 years, and it has happened seamlessly. without creating any kind of disruptions at all, and all regulators, whether it's the sector regulator or the broader finance ministry, needs to be complimented for this kind of work that they've done. Last set of questions, Vaibhavji. Very strong momentum in the market, and of course everybody and his entire office staff, home staff is investing in markets now. Where do you see the Nifty, say 1 year from now? What is the EPS growth that you are working in, and what are the projections for ASK?
See, currently, the way we are looking at from an outlook perspective within the next few years, and before answering that, as you rightly mentioned, that everybody is being investing into equities as an asset class. I think it is fantastic as a culture because it not only creates good wealth for the investor, but it provides good capital for growth of an economy as well. So that being said, when we talk about targets from a markets perspective, the way we look at is basically that we have already seen good amount of re-rating, actually happening, from the valuation standpoint. So I don't see from here onwards further any re-rate possibility of re-rating in terms of the valuation multiples, which means that you should clearly focus on the earnings, how they are panning out. Now, as I did mention earlier as well, that while the whole street may be looking at earnings in excess of 15-17%, we do think that there is slight amount of room in terms of disappointment from those kind of numbers. I would be very happy if earnings kind of grow in the range of anywhere between 10 to 12%, and which is where you would probably see the markets kind of moving on as well. So clearly, no, don't expect much of re-rating, but clearly focus on the earnings story and look for compounding in terms of the earnings as well. So that should be the ideal focus. 10 to 12%, I would be very happy from earnings standpoint.
Right. Vaibhavji, thank you so much for sparing this time, and I love the dichotomy of this conversation. Here is a person who runs a long short FNO fund and speaks very confidently on compounding of earnings. My compliments to you. These are two different parts of the brain which, if they work together, they create magic, and I'm sure you're doing the same for the unit holders of ASK Absolute Return Fund. It's been an absolute pleasure, Vaibhavji, listening to your views and your long short strategy. Thank you so much for your time, and I hope you enjoyed the conversation as much as we did.
Thank you very much. I did enjoy, and my compliments to you. Thank you very much.
Thank you. This, ladies and gentlemen, was Mr. Vaibhav Sanghavi. He's the CEO of ASK Hedge Solutions, runs a long short fund called ASK Absolute Return Fund, and has a wonderful grasp on the underlying fundamentals of what makes markets, stocks, futures and options move. I hope you enjoyed the conversation as much as we did, and remained glued to Business Today Television for all the news updates that come in as far as live markets are concerned. Thank you so much for your time.